and welcome to this week's Trade of the Week on Monday, the 22nd of April. Now, last week we went long the DAX 40 contract, having been stopped out the week before already, which perhaps was a mistake. But if you look at the chart, the week before we went long because we had a break above this hammer formation and it looked bullish to us. And we did rise by about 150 points before then falling down again. But last week, we expected to find some sort of support around the 38.2 Fibonacci retracement, and we went long again. We did rise again intraday, but then actually got stopped out when we fell through our previous week's low where our stop was placed. So I'm not going to go long again, even though I'm very tempted to do so on this bullish hammer formation, because that would be confirmed if we were to have a daily close above it today, above Friday's high. In that case, this hammer, this big hammer, would be confirmed, and that would point to further upside, perhaps taking us all the way back up again towards the 18,000 mark, 18,003 to 400 mark. So that is definitely something that I envisage happening. But from a risk-reward point of view, if I were to get in now, for example, we're talking about the over 400 point risk. And our upside target is probably also around 400, 450, 500 points. So therefore, from a risk-reward point of view, it would be a 1-to-1 ratio, which is why I'd rather like to look at the Dow Jones Industrial Average, which is similar in a way, but the risk profile is better. So you can do that when you don't have favorable risk profiles to play with. So here what we've seen is a very clear descent to pretty important support going back to December, late December of last year and January of last year. And you can see here that that support area wasn't even tested on Thursday of last week. But then we basically rallied on Friday. And now that we've broken above these key resistance areas, short term at least, from last week's highs, I expect further upside to be seen. Now, again, I wouldn't just jump in straight away because from a risk-reward point of view, perhaps it's slightly too wide. But a retracement back towards the 38,000 mark or slightly lower would probably be a good entry point for this trade, in the hope that we will be heading back up again, at least towards the middle of this sideways trading range we saw sort of in mid-March around the 39,000 mark. So this week's trade of the week is to go long the Dow Jones Industrial Average on a minor retracement lower towards the 38,000 mark or slightly below there, with a stop loss around or just below last week's low at 37,235 and an upside target of around 39,000.